Hello traders, the title of the video is A Little Secret of Stock Market Trading. A little secret of stock market trading. Alright, very simple, but only few traders know how to use it. Alright, very simple little secret of stock market trading. All right, so the first thing that we are looking for is to find stocks that pull back to the 78% Fibonacci retracement level. All right, so you can see here we are looking at this stock Discovery Holding Corporation. The epic is DISCB, all right, DISCB, Delta Indian Sierra Charlie, Bravo, because Class B. So we are looking for financial instrument that pull back to the 78% Fibonacci retracement level. As you can see on this chart, I'm using exactly 78% instead of 78.6%. As you can see, the price is now in that zone. You see the line here, that's the 78% Fibonacci retracement level of the prior trend. All right, so price is now at 78% Fibonacci retracement level. We want to check that those stocks are retracing, okay, pull back to the 78% Fibonacci retracement level on the yearly chart. All right, so if you do not have a yearly chart, well, okay, we'll talk about it at the end of this tutorial. Definitely once you use the yearly chart, so you see like this, okay, you see now it's at 78% Fibonacci retracement level. All right, what we need to do, because this is 2016, we'll wait for this candlestick bar to close on the yearly chart. So it got only few days left for this candlestick bar to close on the yearly chart. The candlestick bar that is at 78% Fibonacci retracement key level. So at the beginning of 2017, all right, we will highlight the high, the low, all right, and also the median line of that candlestick bar of 2016. So preferably, we will prefer that at the beginning of 2017, that the price pull back into the median line of that candlestick bar. That's what we will prefer. We prefer it to pull back. So beginning of 2017, the first month, we will prefer it to pull back to retest the median line, okay, of that candlestick bar. Once that is done, we must now check the fundamental. This is very important. So we are looking for stocks on the yearly chart that pull back to the 78% Fibonacci retracement level. And also, we verify that those stocks have a strong fundamental. So strong fundamental stock that pull back to the 78% Fibonacci retracement level on the yearly chart. All right, we draw the line at the high and the low and the median line, and we are waiting for the price to pull back into the median line of that candlestick bar. When that is done, all right, we will now implement a top-down trading method to trade it. Very often, all right, more than 70% of stock with strong fundamental that pull back to the 78% level, all right. If at the beginning of a new year, so we'll wait for this candlestick bar to close on the yearly chart, at the beginning of new year, it pull back into the median line of that candlestick bar and find a support, we will implement a top-down trading method to buy it. So we buy it and hold it, all right. Is that very simple? All right, is that simple to you? So you want to see the yearly chart and you want stock like this one here, you see, it pull back to the 78% Fibonacci retracement level on the yearly chart. We see here. So now we wait for another candlestick, because this is a bearish candlestick bar here. All right, it's a bearish candlestick bar. We can trade at the beginning of 2016 as this candlestick bar was starting, but as it is now, it's looking better for us because we have a long bearish candlestick bar, which means this candlestick bar is very bearish, this one. but the following candlestick bar is not as bearish as the first one. So this is alerting us on the yearly chart that the bearish momentum is diminishing. That's why this one got a smaller size. It does not have the smaller size in any place, in a void, but it has a smaller size at a 78% Fibonacci retracement level. So look, that candlestick bar is sitting, so to speak, on the 78% Fibonacci retracement level. But also we see that the bearish momentum has diminished considerably, all right? Now the following candlestick bar, which is 2016 candlestick bar, is now a little bit bullish. This is good indication for us because they didn't push it up yet. This is excellent setup here. So at the beginning of 2017, we will draw the high, the low, and the median line, and preferably, we will prefer the price to pull back into the median line, and if we find a support there, we'll implement a top-down trading method to trade it and buy and hold, all right? Is that clear enough? Have I missed something? Okay, let me know in the comment section. But the most important thing, it has to be a stock with a strong fundamental. So how do we find stock with a strong fundamental? We perform what we call Google Assist test. That's the first thing that we need to do. So you may search, you may YouTube search, okay, a video that I title Google Assist test, how to use the Google Assist test like a pro. There is a video about it by George Trio YouTube channel. So once we perform the Google Assist test, all right, we check also the economy news relating to that financial instrument. We check, okay, the management, all right, the sector, and see whether the economy news are looking good or not, all right, go a little bit deeper, all right, check all the economy news so you don't miss anything out, all right, and then from there, you check the sector. This is a consumer, okay, it's cyclical sector, so then you will, okay, perform a top-down trading method, a different top-down trading method to trade it. So as it is now, you see how this stock is now. I will put this stock on my bullish watch list. So at the beginning of 2017, I will not try to enter the trade in January. Preferably, I'll prefer to look for a bullish setup somewhere near mid-February. That will be the best strategy. And from there, we'll take it from there. And sometimes stock who that pull back like this to the 78% Fibonacci retracement level with a strong fundamental has a high chance to go back up, all right? So you have to understand what is happening in the financial market. Strong that are very bullish, all right, very bullish, will not pull back beyond the 50% Fibonacci retracement level. All right. Stock that are very bullish, stock like Google, stock like Apple stock, very often, if they have a strong fundamental, all right, if they are pulling back on the yearly chart, you see that they will try to find support near the 50% level, or they dip a little bit below it and quickly go back up, okay? But then there are other stock, ordinary stock, all right, ordinary stock, very often, stock that are not very bullish will pull back to the 78% level. Now, as I'm talking about the 78% level, there is a better scenario that can arise, which means the stock will pull back completely to the starting point. So if you pull back to the starting point, that's a very good scenario. This is what we call a cycle point. So one more time, stock with a strong fundamental. Let me say this again. Stock with a strong fundamental. Do not use this strategy for any stock. It has to be stock with a strong fundamental. Okay, once you find one that pull back to 78% Fibonacci retracement level or 100% Fibonacci retracement level, all right, you want to apply this strategy. If the following year you have a smaller candlestick bar like this, highlight the high, the low, and the median line, and at the beginning of the next year, you want it to pull back a little bit. That's it. You want to buy low. You want it to pull back to retest that 50% Fibonacci retracement level. If it couldn't pull back to that level and it starts going up, you want to look for an opportunity to buy above the high. This is about a little secret about stock market trading. This strategy One can apply it as a swing trader, as a position trader, also as an investor. So the investor that are using fundamental will be very good with this. So you are fundamental trader. So try to combine your fundamental analysis with the Fibonacci retracement. And like this, okay, apply this strategy, and you make excellent decision, okay, to time the market correctly. All right. Now, I was asking the question: if you do not have the yearly chart, what should you do? All right. If you don't have the yearly chart, I will say to you, it's not good. All right. But what we are discussing here, we can apply it on any time frame. All right. Any time frame we can apply it. Okay. But if you are applying it on any other time frame other than the yearly chart, know that there is a high chance that there is a possibility that it may not work consistently. All right. So the yearly chart will give us better, solid, okay, scenario. But you need to apply a top-down trading method to control the risk, because if you just buy and hold, I'll prefer that we use technical analysis here to time the market correctly instead of buying and hold like a normal fundamental traders. We want to combine the fundamental analysis with the technical analysis, okay, to buy, okay, stock with a strong fundamental that pull back to the 78% Fibonacci retracement level on the yearly chart. If you have any question or suggestion, put in the comment section, and in due course, I will be recording another video to answer your specific question. We are the TSTW24 traders, talking about a little secret of a stock market trading. Happy trading to you all, and speak to you soon.